All right, traders, what's happening every Monday? It is time for Ask an Analyst. This is Chris Pulver here, joined by my good friend and trading partner, Tyson Clayton. Say hey, Tyson. What's happening, everybody?
Hey, Chris, I'm in my really comfortable Airbnb kids room as a office, but you know what? Like we say, we can trade from anywhere, right?
Very true, and I know that you are. That's what's really cool. Is what is your what's your travel status, Tyson? You're going to be kind of mobile
Yeah,
for the next how long?
yeah. It's I keep saying life's not gonna quite get back to normal until probably I'd love to say August, probably September. We sold our house. We're in Florida for all of June. July 1st, we fly back to Minnesota to pack everything up, to close on our house and all that kind of stuff. And then we're driving the U-Haul and all that down to Florida. And then we move into an apartment. We sign a 1-year lease in an apartment, and we think we're going to build. So it's going to be probably the end of August before we get all settled in. But um, you got to make do with what you got, right? So
Yep.
we want to move down to better weather. We've been blessed enough to be able to do that. And so now it's kind of duct taping everything together. But it's a good time.
Yeah. Well, the good thing is all you need is a stable internet connection. I'm pretty sure you can find that anywhere.
Exactly.
Yep.
Yep. Exactly.
So I know we have a lot to talk about today. Traders tuning in, and look, we had a really interesting week last week, right? It was all about the Fed, all about Jerome Powell. I think he essentially, kind of covered the market with a wet blanket, and I think it scared the market highs a little bit. We had a pretty aggressive sell-off. We had some awesome trades in currencies last week. Dollar was super strong. Yen was super strong. Tyson, I closed out a majority of my profits. The only ones that I'm really still in right now, I'll come back to the SPY in a second. We want to talk about that. The dollar CAD, I still like the dollar CAD. Just a really clean trend line break. So we had this nice push up from the lows around 2,000, an aggressive rally up towards 20. What was the high here? I'm looking at the high around 24.85. And so my outlook on the dollar CAD is this. We've been waiting for this explosive move, kind of a relief rally, if you will. Came back right to these lows. I think we have a break, a retest, and a go. I'm looking for the dollar CAD to get up into 2,600. So that
I like that. I think
yeah.
that's a phenomenal trade. I think that and this doesn't shock me, but we are almost looking at identical moves in the dollar and all that. And one thing I want to kind of step back a little bit. I don't know if it's interesting to you. I think it will be, as it is to me, but I'm going to use a very crude analogy, but it's one that I think fits, and I think it gives the proper imagery. Let's say somebody is hooked on a really, really bad drug and they want to get clean.
Mm-hmm.
And they decide that they're going to get clean, and they have the feeling of getting clean for like the first day, and they feel horrible. They're like, oh man, I feel like death. I can't do this. And they basically say, oh man, doing the drug is better than the feeling that I get of going through the pain to get clean. The market sold off 2.5% from the Fed saying, how is that like the markets? The Fed said, hey, we're going to give you to 2023.
Mm-hmm.
And the market said, oh no, it's not time for us to get clean yet. Oh no. And it sold off. Are you talk about the most fragile, ridiculous market I've ever, if that is a sign that this entire thing is built on an absolute house of cards, Chris,
Yep.
this is the biggest house of cards I've ever seen. And I've been on record saying, we're going to go down. I think we're going to go down, and I've been cautiously bullish. I have not said that this is going to be as bad as 2008, 2009, but the fact that the market reacted the way it did last week on hey, by the way, we're going to take the drug away from you in like 1.5 to 2 years.
Yep.
And it sold off 2.5. That's a concern, Chris. I got to tell you, I mean, I'm not worried because I like the volatility, but man, the thing I am worried about though, there's a lot of people out there that are dependent upon these highs. They think this is normal. They think,
or this is what it has to do. This is what we have to do. This is the environment we must protect and create and keep the market stable. It's like we're in an environment where we don't have healthy market cycles anymore. We have it's just more and more drift, lower and lower volume, and it's like the market reacts to things like this, where we have these just polarizing moves, where it's all bullish or it's all bearish. And look, we've seen this for. I mean, you can go to historical charts and see that, year after year after year, cycle after cycle, it comes in waves. The market moves in waves. And so all we're doing now, Tyson, is we're just, when it's time to move, these wave cycles are just faster. Like this has been, this trade is an example. The dollar CAD just getting pushed down the way that it was. I've been long on dollar CAD since 123, 122.50, 122, 121.50, 121. I just started to buy into the dollar CAD. Again, I traded really small. Traders with me in my trading room. We were building in, we were holding, we were patient. And what was exciting about this trade for us last week is that this trade to the upside, we cleared a lot of nice profits. I'm looking for a follow-through trade to get back up into 2,600. But my favorite part about this, Tyson, is even with the move last week, this is the one chart that really didn't do anything. Look at oil today. We're at $73.67. Oil has not cooperated or participated at all in this dollar CAD movement. And so that means to me that if oil hits resistance and starts to head lower, that's why I think that the dollar CAD is such a good opportunity to still stay bullish.
So what's kind of crazy is there is some really big, huge, very important markets signaling that they are worried, big time worried.
Yeah.
And I think the worry is we go through transitionary periods in the markets of why oil and stuff does what it does. Oil is a good gauge of inflation, deflation, all that kind of stuff, but it's also a risk gauge. I would rather, in the world we live in today, if I think the world's going to go to hell in a handbasket, I think gold is safer, or oil is safer than gold in this world, because we're still dependent upon oil. Cities are built upon, petrol fuels and the roads we drive on and all that kind of, not just the cars, but the actual asphalt and the road and all that. So it's very, very important. But here's the rally that's happening right now. I think people are worried about the geopolitical makeup of the world. I think that they're getting worried about lines that are being drawn, and people are kind of, when they're in front of each other, think of Biden and Putin and China and Russia, and when they're in front of each other, oh, kumbaya, but really behind everybody's back, it's not kumbaya. And I think the market's kind of signaling that, and that's why oil's rallying up. And the other very, very smart market that's signaling that is the bond market. Wait a minute, everybody's talking about inflation. We have the 10-year yield sitting at 1.4%. That's ridiculous. If you would have told me we would have lumber prices at $1,000, $1,500, and gold prices and oil prices and all this, and the 10-year yield sitting at 1.4%, I would have said you're crazy. It's happening, and the bond market is rarely, almost never wrong. And I got to tell you, I think they're setting up for something. They're setting up for either one of two things. I think, Chris, something geopolitically is coming. Which I hope not, because I'm not a real big fan of nation building and wars and all that kind of stuff. But either that's happened, or they're setting up for a big economic downturn. I think both are pretty bad. But right now, you got to be, if you're going to be bullish, you got to be very cautiously bullish. What's interesting is I'm not a super bull on oil, but I kind of get the rally. It's kind of a risk-off trade in a covert way.
Yeah, no, that's it. And believe me, it's covert, because I'm thinking from a technical side, this is my oil outlook. We have 1, 2, 3. This was all we had for a 4, and this is kind of the final leg. So, I don't know how much higher we drift necessarily. I have it marked on my chart here, the 2018 highs. That's where I was looking for a reasonable technical move, and maybe this is this, Tyson. Maybe this is 1, 2, 3. And we still have a corrective wave 4 that pulls back oil into like the mid 60s, maybe the 50s. But there could be a bigger rally coming on oil later on. I just don't know if oil can blow through 75, go up to 80, 90, 100 without having some type of correction in the shorter term.
Yeah, no, I agree. I mean, we're sitting at supply. We're sitting so high. I just, kind of thinking about everything that's happened with the pipelines and the geopolitical kind of pandering back and forth, all that kind of stuff. It does make sense. However, I would not buy it right now. I would not buy oil. And in fact, I like the short side, which means what's kind of crazy is that when we see the dollar strengthen, we typically see oil sell off, and oil staying pretty strong in the face of dollar. Even last week, it stayed fairly strong in the face of dollar, but the dollar had a massive rally. And what is getting sold off, what got sold off last week, was these more economically tied, where they don't have, a lot of tie-ins with geopolitical risk like oil does. Oil, there's wars that are waged on oil. There's not necessarily a whole lot of wars that are waged on meats and cheeses and soft goods and stuff like that. Like the New Zealand currency is more dependent upon dairy output and stuff like that matters. Most of the time, we're not going to wage a war because of milk prices, but we will wage wars because of oil and petrol fuels.
Agree. And is there also, I think, is it this week? There's more discussions going on with Iran and the nuclear deal and sanctions and whether or not they're coming back in for a nuclear pact. I mean, so that's going on in the peripheral. We've got Russia involved. We've got China involved. I mean, look, you're absolutely right. Like geopolitically, there's a lot of stuff going on that I don't think, it's interesting. Like how headlines formed the last 4 years to how headlines form today in 2021 are very different. So I almost feel like a lot of these things are happening and it's just not as dramatic as it was for the last 4 years. So, but it doesn't mean it's any less, crucial. It doesn't mean it's any less important. So I just wanted to show this, like for the last couple of AAA sessions that we have done, Aussie dollar correction is 7,600. I just want to talk about this. Aussie dollar correction is 7,600. We hit the lows last week all the way back down to 7,500. So we had some nice gravy on the Aussie dollar. I said correction levels on New Zealand dollar to 7,000. We hit all the way down to 69.30 last week, so we had some gravy on New Zealand dollar. Dollar CAD looking for corrections to 2,400. We ended up getting up towards 2,490. I still think there's legs up to the upside to 2,600 on dollar CAD. Dollar Swiss, I said corrections to 93.50, 9,400. We had highs up to 92.50. So I think there's still more upside on dollar Swiss. I think there's more. So I think it's interesting how the markets react like with days like this, where we had such an aggressive Wednesday, Thursday, Friday, all risk off trading, right? Like JPY stronger. The yen pairs were cooking last week with 200 or 300 pip moves within 48 hours. The dollar was, sizzling as well. And we had a lot of great profits. But then we have a day like today where it's like, oh, I guess that was short lived. The market was, kind of, I was going to say peeing its pants for 3 days. And now all of a sudden the market's like, oh, we're fine. We'll put our big boy pants on. We got fresh, clean diapers. We're ready to get buying again. But it's like, I think let's take a look at the SPY to kind of tie this all up. Like now, how this all kind of coincides is let's see where we're at on the SPY. And let's go back to these 2020 lows. You talked about this earlier before we started the live session. All I'm going to do is use our smart trader charts and connect the COVID low with a trend line. And then I'm going to draw some Fibonacci to see where we're at. So as I do this, Tyson, I want you to narrate for everybody what we're looking at, what we're seeing, and then how you kind of see this SPY playing out for right now. So I'll get in the smart trend line right here. Smart trend line from the low. So right there from the COVID low. There it is.
Yeah, and once you got this, that shows just a really clean, nice, every time we've come back down to that level, rejected, rally. That's just been a really natural, very clean buy area. Many times when it comes within a certain percentage or certain distance away from that every single time we've rallied until Friday, Chris.
Right.
Friday was the first crack and close of a close below that trend line. And so when I look at this technically, I see a couple things. I see an up AB, which is ultimately an up AB is bullish, but an up AB is bullish after a decent retracement. And a decent retracement is defined by at least a 38.2% retracement. We haven't put in that retracement yet. We got close, but we didn't put it in. We've now cracked the long-term or longer-term uptrend that you have there. And so why are we rallying today? That's the question. Okay, right. Well, geez, if all that's true, Tyson, we're going down to that 382 or a little bit further and we cracked, shouldn't we be selling off? Well, the markets don't move in a straight line, and we had a big gap down. We had a gap and run.
Yep.
And so for us to be rallying back to fill that gap and to create potentially kind of that right shoulder of a head and shoulders, kind of an awkward oblong, head and shoulders pattern, that makes all the sense to me. So I don't think it's off base to look at Thursday's close and expect price to set a high level. So I think if you put a line at Thursday's close of 2197 or 421.97. Yep, 421.97 was the close, and then you go up to the high. I think that $4 to $5 range, Chris, is the catalyst for the next 10 to 15% move in the SPY. We start to sell off from that level. I'm talking 7, 10, 15% to the downside. We start to rally from that level, 7, 10, 15% to the upside.
Yep.
And the thing I like about that is I like looking for puts, or I like looking for bear call spreads, different things in that level. And I actually believe by the end of August, so I don't think this is a wild prediction. I think by the end of August, we see 390 in the SPY, or about 3,900 in the S&P 500, which would be about 7 to 8% lower. And that'll be a really key area to tell us, are we going to go into a correction, which a correction technically is a 10% sell-off, or are we going to go into rally from there? Once we get into correction mode, if we do, then it will be, is this correction going to turn into a bear? But I think we're going to tag I actually think we're going to tag the correction area, and I think we're going to do that by the end of August or early into September. My first level that I want to start to sell at is right around that 421, 422 level,
Mm-hmm.
and I think we're heading down to 390, Chris.
Look, I think this is there's a lot of ways in which this can play out. I think that this level that you talked about with that close on Thursday is absolutely critical. I know, again, panic in the markets last week, a gap lower from Friday, and here we are fighting back aggressively to fill that gap. So the line in the sand is just where Tyson said. If we start to see that today was a great risk on day, and everyone's kind of the CYA trade, right? The cover your butt trade. If everyone covers up today and gets that gap filled, then we see what the market's really made of. We see if this risk-on rally for today and this recovery can actually sustain a close back above Thursday's close. And if it can't, then I think this is what the ceiling is in the near term, and we start heading back down again. Just because
this would be the only way that I would try to. So trying to pick tops is kind of dangerous, right? But you think about this: if I'm able to define my risk at the top, right? So let's say I were able to find a put or some type of trade where I could have defined risk, where we do a lot of bear call spreads. Let's say I was able to go out to August or September and sell a 425 by 430 bear call spread and define my risk and define my profitability. As long as price stays below that 425 level, I make money.
Yeah.
Well, then that's a good way to look for short positions. I would never ever advise somebody to go out there and short the SPY futures or the S&P futures or short the SPY. Don't do that. That's like we've got a century plus of time telling us that the markets go up. So you're playing a loser's game. However, by defining your risks with some options, I think that's the way to go. So I like bear call spreads, and this is something we can maybe talk about in Equities on Demand tomorrow. But if we get up to that 422 level, Chris, I like going out to probably September and start looking at that 425 level as that area that's going to be defended, and see if we can find some bear call spreads around that.
I think we totally can. And also I think that, that September, October is going to be, I've been saying kind of the harsh reality that the market has to realize, or the economy has to realize, because what I'm still contemplating is, what does the U.S. do when all of a sudden we have, I don't know, billions of dollars worth of unemployment benefits expiring at the end of September? If the U.S. isn't going to roll out another package to keep people floated with unemployment benefits extended to the rest of the year, and I think it kind of works against the U.S. in two ways. One is, let's say that they roll out another package. Right? Let's say we have another $1 billion, $1 trillion. Sorry, $1 billion's nothing. That's like every second in the U.S. $1 trillion. And we have the same conversation of way too much money printing, way too much accommodation, and inflation becomes a very real threat once again. And just like we saw with oil prices rallying, copper prices rallying, commodities rallying, lumber was the big one that made headlines, right? Everything's expensive. Real estate's at highs, markets at highs. So I think if the U.S. does have another extension from September or through September into October, September to December, then we revisit that entire kind of mess that we created from COVID to now. And we just keep kicking the can down the road. I don't think that's a good thing.
And the optics of that suck.
Right. Well, it's just like, so you're telling us
unemployment that says, oh, you know what? The market really still sucks and we got to support it.
Exactly. I mean,
that's not good.
There's
I
a
want to sell
frailty
that
there.
environment.
There's a frailty there.
However, they take it away. Oh, guess what? We're going to take away the punch bowl. We're going to take, take away some of the cheap money. Listen, there's people getting unemployment that need it. Absolutely.
Of course.
But there's also people that are getting unemployment because they make way more money sitting at home than they do going to a job. That's a real thing happening right now. And
that's a labor shortage like that. And that's what I'm saying.
What it's supposed to be there for. It's supposed to be a safety net to get you on your feet so you can go out there and work and be productive again. And it's not that. So I think it's stuck between a rock and a hard place. That doesn't mean, now if I had to guess, if they extend unemployment, that means another leg higher in the stock market, because that means more money into people's pockets, and it means more spending and consumer, they're spending on goods and services and all that, and that's going to float everybody. But I think, Chris, that this game has to end someday.
Mm-hmm.
I think it has to end someday, and I think, it's going to end someday, but it's going to end when the population, when people wake up and realize the world population is actually not growing anymore, which means that we can't actually grow our way out forever. Because if we stop having babies and the population stops growing, then guess what? It's just inevitable that we're going to end up not being able to grow our way out of every situation. And so I think that could be, I don't know how long, that could be 20 years down the road, though. I have no clue.
Yeah, and that's why you and I both remain, our narrative is very similar, cautiously bullish. I mean, we know that there are a lot of mechanisms right now to engineer our way into this house of cards, through this house of cards, keeping this thing going. Where, look, Tyson, we might break these highs, man. Like, this might be the market sells off 3-4%, and then the market rallies 5-6%, and then the market sells off again 4-5%, and then the market, like, we might deal with this. Like, this could be some extended choppy environment where September, October becomes a reality of, is the market going to break the structure and actually correct the way we think that we can, or does it blow off these highs and then end badly later? One thing I want to draw everyone's attention to really quickly, I've been talking about this a lot in my flex room. Take a look at this. So let's look at lumber prices for a second, because if we looked at lumber prices and everyone's like, oh my gosh, this dollar, the inflation is so real. Look, I just want to draw your attention to a couple of things. Look at this automated trend line right here. This is a exponential moving average. And Tyson, I see this right now happening on the SPY and the Qs. We had lumber prices extended from right here with this November 20 low. Okay, this is the COVID low. You know, lumber was up 570% from the COVID lows. Okay. The last time that this was actually a balanced trend was November of 2020. And we extended 276% above a balanced trend. Now, what's interesting is making these crazy higher highs in lumber, what people don't realize is we can have all these points to the upside, all this growth to the upside, but look at what the market does. We have all this growth to the upside, and then within a short amount of time, this took almost 2 years to build this up. And within literally 2 months, it takes away 50+% of it. And so that's that's the type of reality that I think the stock market could eventually have, is we might be able to build our way through and engineer our way through what I think is a balanced area. Like, we have now stretched Tyson a year and a half. We are now kind of what I consider to be an unbalanced or imbalanced trend. And so I don't know if this just goes sideways on the Qs, sideways, refuses to balance, and we blow off these tops, and then we just come crashing back down, or if this is actually going to go slightly higher, maybe it ends up breaking. And we just have this beautiful rising wedge, and you and I have to sit and wait and be patient for confirmation to when this thing is actually going to start breaking structure. So I know that we could stay cautiously bullish, and we could get paid very handsomely for being cautiously bullish. But I can't take both sides. And so I know what you and I are doing Equities on Demand. We are incorporating some bull trades and bear trades every single week. We are taking a lot of directionally neutral strategies, and that is helping, because right now the market could go up, could go down. Volatility can come swinging like it did last week, where it was super, super aggressive for a short amount of time. And then look at it today. This is the VIX. We are bullish from last week. We came up and tapped that monthly target, but we are right back down, again, probably losing about half of that move to literally today's trading. So what's going to be interesting on the VIX is, are we at this period of sustained higher volatility? Like, look at all these lows back here on the VIX around $12. Okay. We have not seen $12 since, July of last year. So we have like this kind of heightened volatility, but the market still like gets excited, gets scared, gets crazy, and then suppresses. Gets excited, gets crazy, and then suppresses. And eventually, I just feel like we got a break. We're going to go back up towards $40 in the VIX. I don't know if we're going to hit 2020 levels. I don't know if we'll have COVID levels. By the way, this COVID level was the same as 2008, 2009. Like, it was, it was a crisis. Like, it was a health crisis that turned into, the leak in the financial armor, because it got really ugly really quickly. But again, we kind of worked our way out of it, and here we are just kind of navigating, right? If the world can come out of this and the world can start vaccinating, the world can start reopening, the world can start whatever. But right now, it's like the world is reopening. And as Tyson said, look at all the geopolitical concerns we have. There's a lot out there on the table right now. It's like, it's not like the whole world's getting along. We're looking at this COVID thing like, we're fine, right? How's the UK doing? How's India doing? How's China doing? Where'd it really originate from? There's still a lot of trouble brewing on like COVID stuff or the economy or who's recovering. So it's just ugly, man. It's just, it sounds like, as we're talking out loud, it's just a very messy situation. So I think cautiously bullish, good equity management, raising cash, buying and holding what you want to buy and hold, but not doing a lot of speculation. That's kind of my outlook right now.
Yeah. And you know what? Another concerning thing to me is, like, I think back in my lifetime, and everybody's watching this probably, you remember like the times in history that kind of seared into your mind. And, we've got 2000, 9/11, we've got the financial collapse, we have COVID. But here's the deal. All of those, 9/11, And I would say COVID is in that same mix. It had an effect in the entire world. The world, the U.S. and the entire world kind of stopped for a little while,
Yep.
right? So
Yep.
9/11 was similar. The financial collapse was similar, and it's like those stopping periods where we remember it took us time to get through every one of those scenarios. This took us no time.
Right. Right.
That's a big concern. Like, it's like we literally forgot, like in a month and a half, we forgot. Like, we forgot that we're locked in our houses. We forgot,
Right.
what? I know
know.
that. Here's the problem. The average person didn't forget, but they were convinced that, nothing's bad.
okay.
Everything's awesome. This is normal. And you just throw a bunch of money at GameStop and you'll be all right. And AMC and you'll be all right. Fundamentals don't matter.
Mm-hmm.
The S&P sitting at a 32 multiple doesn't matter. By the way, do some history every single time the S&P 500 goes above 28 or 30 and look what happens. Not a good time after that. Yep. So I'm telling you, fundamentals matter. They've mattered for 140 years or whatever the history of the market is. They're going to matter again. They don't matter today. You're wrong today, Tyson. I'm not going to be wrong forever.
Right. You're right. And Tyson's on the same page we're seeing some pretty influential people in the markets, like Charlie Munger, like Bill Ackman, like Michael Burry. There's a lot of, I would say, like, trading idols of mine, where it's like when they talk about stuff, I tend to listen. I tend to read those narratives. I tend to see what that outlook is. And I know that it's not today. I know that it's like the overall macroeconomic landscape. And so I want to get ready for what they're planning for. And guess what? Those are the type of personalities and managers that will also be making a fortune when what they're forecasting comes to fruition. And that's trading, right? And so what we can do now is we can pick a side, we can pick our trade sizes, we can have some capital and have some dry powder, and we can fight. We can fight the good fight. We can survive the markets. If the market goes up, down, or sideways, we should be positioned accordingly and not be too heavy to one side. So I think that's the way, you and I do that. I know we're doing it in Equities on Demand. We're doing it in our trading rooms. I think that it's a good time to be, trading what you really like, committed to what you really want, but doing it with good equity management. And I'm trading pretty conservative right now, Tyson. Like, it was a move last week that I was waiting for months. It paid very well. I'm still holding dollar CAD long. I'm still holding dollar Swiss long. I cashed in on all my yen pairs. I'm not in them. I'm going to reassess them this week with a flex room. So I'm going to take a look with an objective lens and kind of reassess, today's little risk on trade. Is it just enough to fill the gap? And do we fade that right away? Come talk to me on Friday. Come back to AAA next week, and let's see where this weekly candle closes. Because if we have a weekly candle, Tyson, that closes like this, where it's bullish today, and then we close down here for the week, then this conversation right now is exactly what you just said. We come up here, we fill the gap, and we see that the reality is this market can't make new highs, and we start to unravel. And you and I are in the SPY right now. We're in, and if it goes up, we make money. If it goes down, we make money. And we have this out until July. So we're going to be fine.
Yeah, I think we're on the same page. Yeah. I think this is a very, very, I don't necessarily know if it's just this week. I think the next 2 weeks is key. I think into the holiday, I think people are going to kind of figure out what big money is going to do over the next 2 weeks is to figure out what their next play is going to be for the next 3 months.
Agreed. And
they're going to make that decision before the holiday. And I think that's kind of where we're at. And I think the next week or this week and next week, early next week, and I think we'll get a lot of indications this week. I think we're going to be able to know, again, what the next 10% move is going to be.
Yeah, no, that's great. And it's funny you say holiday trading, because that is always an important thing to watch. One thing that kind of surprised me last week with the dollar is this is happening in the middle of June. Like, does this mean that this is what the summer trend is? Are we going to have, something from mid-June to now, like the middle of August, where it's just kind of the dollar drifts? And we see if this takes us through July 4th and takes us through the holiday and that last kind of official month of summer trading. And then August is always a transition month. August to September is when everyone comes back looking to trade and where that, Q3, Q4 is going to take us. And I'd say buckle up. I'd say it's going to be a really interesting, probably very volatile rest of the year. And I know that traders need to be ready for anything. And hopefully that, volatility is good enough for us that we can take lots of trades, have lots of opportunity, but doing it with the outlook of we're going to be positioned whether the market goes up, down, or sideways. We should be able to kind of battle-proof our portfolio and be, and same thing right now, like, portfolio-wise, like I know you and I are kind of excited that cryptos have been falling. They're falling back to levels that, everyone's like, oh, Bitcoin can't break below 30,000. It's like, you and I both know that 20,000 would be a bargain. To get Bitcoin at 30,000 or 20,000 would be absolutely amazing. Now, are we back down to the lows from May? No, but we could revisit them. We could still flush down and create a base between 30K and 20K. And I would be, to me, Tyson, that base is, if we hit 30,000 to 20,000, that to me is an accumulation base. I would dollar cost average. Yeah.
You got to ask yourself always, who hasn't bought that's going to buy? Everybody who wanted to buy Bitcoin
bought it and they're out and they're waiting.
Bought on the big run higher and with the Coinbase IPO.
Yep.
So that's this phase, guys. That's this phase of rally. Just like in 2017, it was Ethereum's getting listed on Coinbase and Litecoin's getting listed. And it was these catalysts and stuff like that. Now, what's the next catalyst? I don't know, but it's done. The last catalyst is now, we're going back down to mining cost. That's right around $20,000.
Yep.
Been saying that for like 3 months, Chris, and it's going to happen.
Yep, I agree. So that's it. I mean, we obviously covered a lot of stuff. We covered the SPY. We covered currencies. We're covering, cryptos. It's like, I'd say if you're looking at cryptos, let price come to you. If 30,000 looks attractive, I'd say a small position at 30K, a $30,000 entry or test level, and then looking at
that's a phenomenal buy.
Right, and then accumulation. It's like, look, if I bought in at 30,000, bought in at 25, bought in at 20, I could take part of that and say, okay, you know what? I'll buy here. If it goes up, I'll take profit. If I buy here, if it goes up, but I mean, I could say 3 levels, hold 2 of these long term, and then take 1 for some short term. I mean, we're not done. Like, if this has any type of reflection of what we saw back in 2018 and 19, it takes time to build these bases. It takes time to build these bottoms. It takes time to sit here and accumulate. And it might be very boring. And that's what I love, Tyson, is all of the speculative, retail traders, all the Dogecoin millionaires, and all the traders that are like in and out and have no idea what to do now. Look, patience is where we accumulate. And if this thing goes back to 2021 highs or beyond, this is where the stretch gets really real. This is the type of run where if we accumulate between 20 and 30,000, I think the next leg higher is going to be the 6-figure mark. The next leg higher is where Bitcoin hits 100K. What's that?
Just don't accumulate in Doge.
No, not Dogecoin. Right. Just don't. Yeah. But but you can look at these.
I understand completely what you're saying, and agree 100% that I think these are going to be generational buying opportunities, just like they were in 2018, 19. Everybody who's like, oh man, is crypto dead? It's never going to go anywhere.
Yep.
Well, win someplace. We're going to have that same thing happen. It's happening now, and just a little bit lower.
Yep.
Obviously, wishful thing. I hope we get down to 20, because that would be awesome buy opportunity.
Absolutely. So that's it. We'll look, come back and join us next week on Monday for AAA. If you're in with us in the trading rooms this week, I'll be in Flex. Tyson will be in your trading room. You can also join us in Equities on Demand. It's never a dull moment here at Market Traders Institute. Have a great week, everybody, and we'll see you soon. Thanks. Bye-bye.
Bye. We clear? Okay. Cool. All right, man. Cool. Peace.